Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
Amongst the theme we have been covering over the last few weeks, more recently we have been observing a slight weakness in growth data out of the US. Yesterday's ISM PMI was also in a similar line. But on currencies front, dollar has been on the stronger side. USD JPY trading above 160, USD CNH above 7.30, and yields trading higher. Good morning, JK. Your thoughts on the recent moves in the markets?
Good morning. Yes, we had weak data from US on the ISM side. In fact, we also had a weak German inflation number yesterday, giving some support for another rate cut by ECB, although they might hold off until they get more indications from Fed move. But that is not really reflected in the bond yields yesterday. In the long bond market saw quite a bit of sell-off yesterday, with several factors, other factors playing out. First of all, the Eurozone yields were off, rather were higher after the French elections. There was also a reversal of long positions of the bonds created ahead of quarter end last week. So the 10-year and 30-year yield rose more than 14 basis points, while the 2 years were around 3 bps higher. Thus, there was a big steepening of the yield curve. German yields were up 10 basis points, French were up 6 basis points. So overall, there was a sell-off in the bond yields. Bonds and the higher movement in the yields. And perhaps market is started to look at the loose fiscal situation that's prevalent and likely to worsen both in Europe and the US economy. So I think market only has so much appetite because we have seen consistent buying in the bonds. Now there are more issuances from the US government as their deficits are higher and their borrowings are higher. And of course, the European political situation is also commanding higher premium on the Eurozone bonds. So the data from US ISM showed a lower number at 48.5, and we had contraction in employment. There was a prices paid were much lower at 52.1, and on the other side, German inflation fell more than expected. So these are good for rate watchers, but again, Fed members were hardly hinting at revising their outlook on rate cuts by the Fed. The dollar has been, of course, moving in its own, not really taking cues from any other market. We have seen the euro see some relief rally after the French election first round results, but then fell back to 1.0730. In fact, the other currencies were also weaker, like Canadian dollar and Australian dollar, which were holding up well, but I think they were all pressured by higher US yields. What was the trend that is really consistent is the yen weakness, which is now touched a new high of 161.70. The yuan again touched another new high at 7.3070. Now, these are the two currencies which are most affected because of the yield movement in the US, and already they have a huge differential. And if you look at the Japanese yields, there is a 340 basis points difference with the 10-year US yields and 440 basis points. And these are attractive differences which the market will keep grabbing. So that's the reason why Bank of Japan is unable to hold back the, hold back the dollar against the yen. And China, of course, also has almost, if not so as much as Japan, but still has an attractive yield difference. And the Chinese economy not doing well is also helping the dollar to be higher. So the general trend of the currencies of weak, the lower yielding currencies being weaker is continuing. Of course, currencies like Indian rupee with higher yields and also the bond index related flows continuing has helped the currency to maintain its stable range. And of course, as we know, RBI is present, and yesterday also the PSU banks were present at 83.40 levels. So I think that will continue. If more weakness is seen in other currencies, possibly we can see the dollar INR also moving up to its top end of the range at 83.60. Now, looking forward, we have two important points to ponder about. One is the labor market data from US, the job openings for May. And that's seen dropping to 7.91 million from 8.05 million in April. And that's the lowest number since February 2021. And it's also reaching closer to the pre-pandemic level. So the job openings data is really, clearly depicting a weakening job market in the US. This could, of course, be somewhat comforting to Fed, which is looking for moderation in the in the economy. And of course, the second event that we will looking forward to today is the central bankers panel speak today at the European central banks organized a meeting at Sintra in Portugal. This is an annual meet equivalent of the Jackson Hole meet that the Fed arranges. And today we will have the panel discussion where Powell will also be a part of it. This year's theme is the monetary policy in an era of transformation. Very, very relevant topic. What the market will be looking forward to is whether Powell will loosen up on his hawk talk, acknowledge some weakness in the economy, and also, if not, point out about May's PCE number coming lower than expected. In fact, below Fed's forecast in the last projections in the Fed meeting. So, or whether he will continue to hold out, attempting to prevent markets from front-running rate cuts. So this is the two things that we will see, whether more labor market weakness and what Powell says is what the market will be looking forward to. And these will be the big drivers for the market as far as today is concerned. And then the data plot thickens from tomorrow, more labor data. Thursday, of course, is a US holiday, and Friday we will have the non-farm payroll data. Thank you.
Thank you, JK. And of course, the major theme coming out is the steepening of the yield curve, which is in place. Longer tenor yields have been rising sharply. And of course, the related dollar strength, USD JPY, USD CNY, all are at new cycle highs. But rupee has been quite stable due to bond index inclusion related inflows and RBI's activity. Of course, we have got some key events. Job openings for May was seen dropping, reaching pre-pandemic levels, and the Jackson Hole equivalent central bank meeting, which is being organized by the ECB today, and all eyes will be on Powell. But that's it from us today. Thank you so much for listening. Tune in tomorrow for the latest in the financial markets.